Hello, Xandru. Welcome to Cloud Learning. Today's book is Financial Shenanigans, How to Detect Accounting Gimmicks and Fraud in Financial Reports by Howard Schilit. If you like my work, please give it a like, subscribe to this channel, check the playlists, and support me on Patreon and PayPal. The links to Patreon and PayPal are included in the description to this video. First, I'll describe the contents of the book, talk about what's interesting about it, then I'll move on to what you can get out of this book. Dr. Howard Schilit, CPA, is the founder and CEO of Schilit Forensics, an investment research consultancy that specializes in providing forensic accounting services for investment funds. With this firm and others, Dr. Schilit spent decades detecting accounting tricks in corporate financial reports that mislead investors. Prior to this, he was professor at American University and had spoken before Congress, the SEC, and the mainstream media about financial shenanigans that distort the appearance of companies. In Financial Shenanigans, Schilit teaches techniques to uncover and avoid accounting frauds and inflate profits. These include such methods as suspicious write-offs and shifted expenses. The aim of these different tricks is to satisfy Wall Street and its various investors. Companies want to make their financial performance look a lot better than it really is. A huge number of cases are studied. Among these are Waste Management, Sunbeam, Bausch & Lomb, Xerox, AOL, and Microsoft. Higher reported earnings will massively increase investor attention to the company and increase the share prices. With executive and manager compensation tied to their share price, they have a lot of incentives to report earnings that are a lot higher than they really are. Also, companies with problems like increased costs and lowered earnings will have the incentive to protect themselves with modified numbers. The problem with artificially high share prices is that eventually they will crash when the earnings are revealed to be too low. Investors will then be stuck with financial losses. Financial Shenanigans presents fundamental tactics for anyone who is at risk of being affected by misleading business valuations from companies, whether you are an investor, lender, or manager. It allows you to develop a more critical eye in reading research and financial reports and to detect early warning signs of a company's problems. Financial Shenanigans 2nd edition focuses on 7 key deceptions. The first deception is recording revenue too soon or recording unreliable revenue streams. The second deception is recording fake revenue. The third deception is boosting income with one-time gains. The fourth deception is shifting current expenses to later or earlier period. The fifth deception is failing to record or improperly reducing liabilities. The sixth deception is shifting current revenue to a later period. The seventh deception is shifting future expenses to a current period by disguising it as a special charge. The first 5 of these shenanigans aim to inflate the current period and to make it look better than it is. The last 2 conversely deflate the current period so that future earnings look better. There are all sorts of interesting insights, such as how investors should be aware of companies where earnings exceed operating cash flow by a wide margin. How they should watch revenue recognition policies closely, as it is the biggest area of financial misstatement. Investors should look for assets and liabilities that aren't on the balance sheet and avoid companies with hidden liabilities. Companies build an excess cash flow over earnings in the past to cover up their bad performance right now. Watch to see if operating cash flow is greater than earnings, as it's another place for manipulation. 1, 2, or even all 3 statements can be manipulated. This includes the income statement, cash flow statement, and the balance sheet. Beyond the 7 shenanigans are more areas of exploration on how companies can exaggerate earnings, acquisitions, revenue, and cash flow. How mergers and acquisitions are used to hide worsening financial situations. Also, how executives of companies create misleading measurement systems to portray their company's performance as better than it really is. Readers will also learn how corporate cultures are biased toward dishonest practices in order to make more money. Finally, the book has chapters in an appendix on how to analyze financial statements. To illustrate all the deceptions, Dr. Schilit uses a huge number of real-world case studies of various companies performing various financial tricks. So all the financial tricks have been done already by publicly traded companies. Most of them are drawn from SEC cases and civil litigation. I have finance and accounting degrees, and I have studied financial statement analysis. I consider Financial Shenanigans, second edition, to be a very good book for beginner investors and students of accounting who want to learn what is actually behind the numbers and how reliable these numbers really are. This book is a great introduction to how forensic accounting actually is and is taught in accounting programs as a primer. So even if you are a casual trader in stocks, over time you get more and more curious about whether or not these numbers are biased and not accurate. This book opens the way to understanding many of the most fundamental tricks that companies use. You get more and more analytical and skeptical about the figures that you see, especially if there's a high incentive to make the numbers appear better than they really are. After reading this book, the investor can consider whether or not they want to learn more or they don't have the patience or time for reading publicly available filings like the 10K and 10Q financial reports. If you want to learn more, you'll have to study more complicated textbooks. The advantage of Financial Shenanigans and why it's a classic is that it's accessible to just about everyone who reads the Wall Street Journal and Barron's. It's filled with practical advice and doesn't bog you down with unnecessary complexity. It's a lot more focused and more on what the trader and investor cares about than an accounting book for accountants. It's a good and essential education on what's out there, and it doesn't take a long time to read like a textbook. It's relatively simple and written in plain English and has a basic financial statements analysis guide. If you need to look up terminology, Googling or using Investopedia will be sufficient. It's also good for people who are accountants or are seasoned investors. The main disadvantage of this book is that it's very much a survey level book. There is also more about the income statement than the balance sheet and cash flows. After reading it, you will learn about all sorts of case studies of businesses, but actually learning how to put it in practice is really up to you and how much time you are willing to commit to the task. It is easy to say that a stock in a company is bad with hindsight, but discovering the financial fraud years or months in advance takes a lot of in-depth research and a lot of time. For people who want to explore forensic accounting for investing and stock trading in a more advanced manner, I recommend Creative Cash Flow Reporting, Uncovering Sustainable Financial Performance. Also, Hidden Financial Risk, Understanding Off-Balance Sheet Accounting. Also, I recommend the Financial Numbers Game, Detecting Creative Accounting Practices, and Guide to Financial Reporting Analysis by Charles Mulford and Eugene Komsky. Links to these books are in the description box below. I rate Financial Shenanigans a 4.5 out of 5 stars. So that's what I think about Financial Shenanigans, how to detect accounting gimmicks and fraud in financial reports. Please put your thoughts and ideas in the comments section. They always make a great conversation. I hope you find my review to be informative. Thanks for watching.